everyone, welcome to your daily update for Sol and BTC. If you're new to these, then you might not understand any of what I'm saying, so check out the education playlist and you'll probably figure it out after that. If you've been watching these a while, then welcome back and thank you. Liquidity at this stage is starting to balance out on BTC on the 1 day, so not kind of what you want to see. You sort of really wanted to see kind of a fast bounce, but at this stage they're not terribly worried whether you open a long or a short, which normally means they're going to look at taking both. If they were to do a bit of a dive, then that 85k area would pretty much take everything out on BTC. And if they were to move to the upside, they really only have to go up to about 89 again and take out the top side. So it just sort of shows as price gets condensed, people pretty much open up more risk effectively. They think, oh yeah, we're in this tight range, we want to make money, so therefore we're going to have our liquidations quite close. But that only works until such a point as things break and head in the other direction. So as far as Sol goes, the 1 day liquidity would be pretty much wiped out if it went down to 130, and if it went up and hit anything above sort of that 140 to 144 area, then that would take out all the top side. If we have a quick look at the 7 day, 7 day is actually becoming bullish for Sol, which I think is a bit of a problem because there are those targets down to 119, and it's now looking like it would be better to go and take those longs before any kind of move. And top side around that 146, 147. 147 had a lot of confluence yesterday, and we still haven't really gone there, and there's more resistance forming at that level today on some of the high time frames. So when we have a look at Sol later, it looks like maybe we go to 147, and then after that you could have a rather large retrace. So we'll see how that plays out. And of course, down to 80k on BTC would not be out of the question, and there is more resistance forming around that 93 point today as well. So if we look at the 30-day, well, 30-day has got some higher targets, so you could see liquidity getting taken all the way up to that 97, 98 or 150 sort of area on Sol, but the bottom side of the range is still pretty much the same. It's sort of like 120 or 80k for BTC, and it's really the only time frame now that's actually looking like there's more short positions open. So 1 day is pretty much evened out, 7 days pretty much evened out. 30 days still shows more shorts to the upside. So but they don't always get taken, and certainly the price action the last couple of days has been as someone put in the Discord, tired boss, tired boss. Pretty much every single day we have the ability to get out of this range, and every single day just before the candle closes, they sell the price down to make sure that we do not get the close that would be helpful to exit the range, and here we stay sideways. So now that we've hit that 89 minimum target for the monthly backside bounce, there isn't really any obligation to go higher than where we are right now, not with the same certainty, but it does seem a little bit weird that we're spending all this time here. And even if we were to dump down, like there's so many shorts are starting to form in close proximity to price that it actually makes, even if we are going to go for a dump, it makes sense to go up and take some of those shorts. And then they may not be really, really high up, all new all-time highs or anything like that, but when you've got a whole bunch of shorts sitting at 93k, even if you wanted to shove the price down to 70 something, you might as well go and take the 93k shorts, and into those shorts the major players can open their positions without affecting the spread too much. So it's that's kind of where we are at the moment. All right, let's have a bit of a look at these charts. So Sol BTC on the daily, yesterday we broke trend. We went up and we hit the hold at the top. We've created a range trend. we didn't have much of a wick on the top of the range trend, and we're currently sort of sitting up over the top of the range trend. So, and we are looking to potentially hard close this break level. So, um, really, what should be happening right now, although it seems to be a very delayed response, is we should be coming up here to this 16331. If we get a yellow candle close or a accumulation close today, we will be hard closing over the top of the trend again. We will be hard closing over the top of the range level, and yeah, it should be going up. Although it just doesn't seem like it wants to. So the trend will move again to the top side of the candle, assuming the candle stays yellow, and then bullish case is that it opens on the top side of the trend again and can keep working its way up. Bearish case, of course, is that we get this candle sold down. It only has to move down a little bit. Like we're at 15760 at the moment. It only has to go down below its open, which is 15680. So it's not much for it to be sold down and then not be a trend break and then not be a close of the break level, etc. So yeah, now it can't actually break the range trend either. Like what it's doing is a little bit trappy. The fact that it's bounced off the break level and it's pushing through the range trend, but it's actually on the range trend, that kind of thing normally implies that we're going to get some kind of pullback. But yeah, strange price action. On one hand, potentially going to break a trend again. On the other hand, it's not actually breaking a different trend. We may hard close a break level today, so we might then get a retrace. The retrace could be triggered by the fact that we haven't actually broken the range trend because we started on the range trend. Although we could see a pump because effectively we should be trying to move up to this next range level. So yeah, overall, it's basically as if it just has not made up its mind yet to move. So let's see if we can get any more insight out of the safety assets. Yeah, so the safety assets on the daily, we're below the support trend. If the candle closes blue, then we break that trend. It has activated that 67.26 support that we spoke about yesterday, but it seems to be finding the 67.41 range level as resistance. So if it closes kind of where it is, then it might have another go at trying to break through that support. The wick on the bottom of the candle's a bit too long though, so effectively what will end up happening is the trend will move to the bottom side of the candle and then it could bounce and it could target this hold area, and that basically just puts it back up to that 67.9 or 68% area again. So it's kind of just not confidently breaking down. Looks like it just wants to try and keep ranging, although this is the closest it's been to actually breaking out of that range for a while, certainly for about the last 14 days. And it looks like if it is going to break out of that range at the moment, it is trying to break to the downside. So if it goes full bear, or I suppose I should say full bull, because this would mean that altcoins pump. But if it goes full bull, then the next level is going to be the 66.86 area, which it's going to run to, and then it's probably going to find support, and then come back up to retest something above. If it goes bearish, all it really has to do today is close back up above that 67.41 area, and then it can push up to the 67.75 again, and be another day of chop. So yeah, that's pretty much all that's telling us. So let's have a look at the totals. So the total is basically pushing into trend resistance from two different directions. So it's got a range trend and a normal interior trend, both trying to put the price down. Ideally, you want to see it close over about 2.69, 2.7. Then the next candle would be opening on the top side of both the trends, and it would have a better chance of actually running up. We're not hard closing the range level, which is problematic, because if we had actually closed this with a yellow candle, or if we do close this with a yellow candle by the end of the day, you never know, then that 2.66 trillion becomes the range base, and then it can start trying to work its way up. There's not a huge amount of confluence with these levels, so I don't really think this is actually the breakout candle or the new range formation, but you never know. The level 3 does kind of line up with the hold, so maybe. If it closes up over the trend, then it should have another swipe at that 2.74 area again, and then we've got trends and holds and all sorts of things basically designed to try and keep the price down after that. So it's certainly not out of the woods if it stays here, but a little bit higher, and it could actually get up over the top of those trends. Okay, so let's have a look. I've actually just taken a 15-minute scalp. This is how boring the market is right now. How's that? So we're scalping range levels on 15-minute charts because there's really just not much else going on. So so hard close of this is the range control candle down here. Hard close of the range, entry, exit, job done. But so there are still trades out there. It's just they are on lower time frames while the price just kind of meanders around on the higher time frames. All right, let's have a look at Sol. So we've got a few closes today, not many, but there is confluence in all of them, which is something we haven't quite seen for a wee while. And there's growing confluence with previous closes as well from earlier in the week. So I tried to get this scalp last night, which was pretty much just from the 132.8 level up to the 137, and I had my order set pretty much exactly on the line, and as you can see, it decided it would not let me in. It didn't quite touch, so that was kind of frustrating when I woke up this morning and saw the price had gone up, and my order had not quite been filled. As for where to from here, unless the candle actually flips yellow, it's not a hard close of the range trend. It's potentially going to open the candle on the wrong side of the support trend, which means it could push up and reject. And it's also, you really want to see it close up over that 137.682 area as well, so that it sort of shows that it's trying to operate in that next level of the range. The 147 area is the one that I mentioned at the start of the video, which I think is possibly going to be some kind of really big pullback that comes out when we hit that. So we'll have a bit of a look at that on these higher time frames. Certainly, I'm very cautious of any kind of long that might get presented when up around that sort of price point. I would be very, very, very cautious of it. So but as it currently stands, we cannot break this trend. We can't break the downtrend if the candle is blue. If it has a bit of a pump before the end of the day and closes yellow, then great, we're breaking a downtrend. But yeah, it's pretty much just a nothing close. Also, the fact that it didn't quite touch that level down there sort of says to me that it's probably going to go back. They don't usually leave little imbalances like that in the charts. Okay, so we've got a 7-day close today, and this is pretty critical because, as you can see, it is just hovering over top of the 7-day origin support, or break level. Sorry, it is. So 137.082 is the level that we want to make sure we close over when it comes to the 7-day. Obviously, if we can close higher than that, great, because then there's other implications. But we have this resistance also sitting here at 140.254. Now, we came from the top side of it, so it's not actually a level that is getting hard closed today. So it can bounce back up through that. What is also happening today is the trend is shifting. So trend support will come to the bottom of this really long wick. And if we were to retest the prior broken trend, it would sort of be up at about that 150 price point, 149, 150 tomorrow. And that's assuming we actually close up over the break level, and assuming we actually get above that 140.254. There's a lot of there's a lot of stuff going on here, which is trying to keep the price down. We then have range trend resistance, which actually, sorry, it's just normal. It's just a normal trend. We then have a normal trend, which is up around that 150 area as well that we could run into. So effectively, it would be a backside trend retest from a prior broken support trend. It would be running into a normal trend resistance. However, the actual fib range is going to want to try and come back to 159. So we've got all these. If you've been watching these videos the last sort of week, we've got all these upside targets that just haven't played out yet, and I'm sort of sitting there scratching my head, going, "Why? Like, what are they waiting for? Is it just, are they really just want mass capitulation? Do they just want everyone to give up?" And then these are not necessarily targets that are going to give a new all-time high, but they're things that make you not want to short the market where it currently is, when you know that there's all of these retests and all of these reasons for the price actually to go up. So yeah, kind of means that scalping tiny little longs, even though potentially the price might still go down, but if it flipped back to 159 in the next 7-day candle, then that would just be the most normal price action known to man. It's just bouncing between two range levels. So the question really is just, why is it taking so long? Okay, so looking at the 47-day close, so this is where we're starting to get more confluence around that 147 level being an area of rejection. So if we do not get back up over 147 today, then it is the break level of this range. It's been broke, it will be broken because it's been hit. Hasn't been hard close. We are creating a range trend. If we were to take a dump down to about 120 to tag that range trend, we could then push back up to the 147. But likewise, it can happen the other way as well. So like, we can go up to 147 and then we can dump down to the range trend. So the actual origin of this entire range is down here at about 109. And we may end up even going down there to actually test that. So the other side of the range is all the way up here at about 256. So these are really, really high time frame, really high time frame structure, and it would be entirely normal to both go to 120, and from the same perspective, you could go to 256. But from a shorter term, like, what has confluence here is that they seem to be developing, 1-day reasons to reject at about the 144, kind of about the 144 to the 147, 150 area. They also seem to be, putting more support levels in about the 120. So it just over and over, it sort of says that we might see that 120 price point on Sol. What could lead us there would be a close under 147 today, and then a retest of that higher time frame break level, and then a rejection off it back down to the range trend. So just, I'm keeping a very close eye on what happens when we get up to the 147 area. Now, if you wanted a really, really, really bearish scenario, the bearish scenario is actually just any close under 143 can actually start the move down to the next range level, which is $75. So that's real. That can happen. It's not a hard closed range, so it's not like, if there was a candle, a blue candle between full body between 143 and 75, then you would say, hey, I can short this level and I can take it all the way down there. And that's kind of what the market's just not giving us right now. It's not giving us much clarity on exactly where these support and resistance levels are, and whether they are 100% support and resistance levels. So the 15-minute charts are working fine, but when it comes to the bigger stuff is very, very, very vague as to what its intentions are. All right, let's have a look at BTC. Yeah, so as I'm making this video, we've just pumped up another dollar or two, so it's just ranging backwards and forwards. But interesting to see if they just keep this going for the next hour or so, and whether we actually do end up having a good close today. Yesterday's closes seemed like they were finally starting to turn around, so it's it'll be interesting to see if we actually do get the opposite today, which is a bit of a pump and good closes. So yeah, looking at 1-day BTC, it's rejected off the trend because they sold it down. Sold it down a little bit yesterday before close. We are breaking a trend, and it's going to form on the bottom of the wick. So you sort of want to see it close over about 87,700 roughly. If it does that, then it's on the top side of the downtrend, and it's still technically above the support trend. So, we're at 87,278 at the moment, and it's really not impossible for it to do that. It's just, will they let it happen? If they do let it happen, it's potentially because what they want to do is actually continue following this trend up. So you could take that as being a short-term bullish move or intention. As far as range levels, we didn't quite tag the 89,265 level, and I was sort of expecting us to hit that level and then have some kind of pullback or rejection from it. We got really close yesterday, so it got up to 89,160, and then it's seemingly had its pullback, and potentially this range is actually the distribution range is failing because we've hit this 86.469, and we are pushing back up, which effectively means accumulation is happening within the distribution range, and therefore distribution may be failing. So the 89,265 level should reject. So that's, you could probably look at that with some confluence that if Sol reaches a price that is resistance, so let's say it reaches 144, or if it reaches 147, and around that same time BTC is pushing into 89,265, then you'll probably get a pullback across both tokens because they're both in resistance and sort of in sync at the same time. But as far as bullish close, if it keeps moving up, only needs to go up about another $300 and then stay there, and then that's not such a bad close. Breaking a support trend when you are bottoming is actually just part of the process. So you don't just have a candle that just goes straight up. You have a couple of candles that form the accumulation range. You have a pullback. The pullback needs to not engulf. So this is all just normal sort of bottoming formation. Okay, let's have a look at 7-day. So 7-day, we need to see it get back up over that 88,500 for close. Ideally back up above the trend, but I don't know whether that's asking too much. That sort of means a close up around the 91 area. And if the distribution is failing, we should be heading to 93. So that basically is just first touch bounce of the backside of this range trend. So that's where you could have entered along, which was about 81. The actual target at the moment that we touched that range trend, the target was actually 98. But if it can't get back up above the support trend, then that can become resistance. And if it can't get back up above the range levels, then they can become resistance. And because we are hard closing that 93 level, 93.626 level today, then that you'd have to reduce your target. So normally you'd be looking at longing the bounce of the range trend, being the 81, and you would be taking it up to the hold here, which would be your 98 target, but it's just taking too long. So given that it's taking too long, there's new resistances, and you just have to revise where you look to take your TPs. And the 47-day is creating a range trend. It needs to be same sort of confluent type numbers, like it needs to be up over that high 90s to 91 area if it actually wants to be on the top side of the support trend. If it closes where it is, it may push up and the backside of that trend is only really in the 89s. So if it pushes up and rejects, so this is the bearish scenario, it rejects off the backside of that trend and then comes down to test the range trend support. So that just basically is a full round trip back to 81. Anything above that, so like it could come up to 99, 98, somewhere around there, which is the next trend. And the bullish scenario is that it ends up coming all the way back up here to 107, but it's a 47-day time frame, so it could take a couple of months for it to actually get there at the current pace of things, or we could just have a bullish pump and it could be there in a matter of hours. It all just depends on whether they want to let the thing go. Basically, the targets are there, the supports are there. The moves will typically play out. It's just a case of when. So, right, let's have a look at Tesla. Yeah, so not a bad close really for Tesla. It's hard closed the break level in accumulation, which is good. It's in a position where it can open the next candle on the top side of the trend. So overall, pretty good daily close. Basically just using the trend as support. You'd expect it to try to come up and challenge this 432 area. 432 through to what's the break level there? 442, so sort of up into there. If it manages to actually break the next break level, then it's back into range and upwards again on the daily. So yeah, looking at that on the weekly, it's bounced the trend, it's pushing back up into the hold area. It will probably run into resistance, when it hits this topside trend again. So that's funnily enough, that daily range that it's looking at heading into, and certainly that 434 is probably going to be resistance as well. So it's looks like it's reversing and heading on its way into resistance. All right, let's see where MicroStrategy is at. Yeah, so MicroStrategy is basically just behaving like Bitcoin. Surprise, surprise. The 174, which is that 3-month support level, should be heading back up here to 219. But as you can see, it's just kind of stuck under it on the daily, and it's above the downtrend, under the horizontal support, and just compressed. How long it sits there for, I don't know, but all it really needs is it needs tomorrow or any day after tomorrow to be an accumulation close, and then that's actually a break of the downtrend, and that could kick off a move on the daily back up, test the hold level around 196, which of course is just part of the reversal that is required of a downtrend to then actually utilize the support to head up to the 219. But yeah, as it currently stands, it's just compressed, sideways, boring, doing nothing, waiting. Don't know what these things are waiting for, eh? Like some kind of catalyst, rate cut. Who knows? Who knows what the stuff is waiting for? But it's just boring price action when you can see the targets and they're just, all we get is sideways. On a brighter note, it could be that it is accumulation. You might find that generally speaking, when there's so much FUD around something, it's because they're trying to drive the price down. There was an article I saw just this morning where they talked about how all the major players sold their shares, etc., etc. Well, and it's an attack, on MicroStrategy, and like, I don't know. I mean, to me, it just seems like smart big money sells their shares because the price is high, and they know it's gonna go down. I don't think it's an attack. They're just taking profits, which is what everyone should have been doing when the price was high. And if anything, while all the FUD is out there now, and before the FUD gets dispelled, maybe they want to accumulate here again, which is a good thing, and it means it might push up once positions have been built. And then a month from now, when they disclose their books again, it turns out they sold it and they bought it back. So who knows? But yeah, as for a trade on this, long term, the price of this should be going up. even if it is only to your 219s and 292, it should definitely be going up from the 174 area. Short term, do they push it down a little bit more? Maybe. First, do they keep it sideways for a period of time? Maybe, but you can't really have things bouncing back too quickly, otherwise everyone would ignore the FUD. So it's you got to have the price stay down for at least a while, otherwise all the rumors didn't affect things. So it is what it is. All right, that's it today. I'm very, very tired today, just in case you haven't noticed, but hopefully you get something out of that. If I had to summarize it, I'd say we have so many things pointing to the upside, but we are building a lot of resistance, sort of around that 144 on Sol, 147 on Sol. And they've spent too long here, so like there's just everyone's had the opportunity to open up leverage longs, and they are doing it with even higher leverage because the price range has been so tight, and they're taking bigger risks. So, I just if we do get a pump to the upside, it just really wouldn't surprise me if you then get some kind of wick down flush of all of these longs that have just opened up. And if that has a fast recovery, then that is the sign that you're looking for, because we're not seeing a fast recovery, and I've said it 1,000 times probably, but you know markets let you open positions when they want you to be in the market positioned a certain way, and that's so that they can use those positions to open bigger positions and not affect the spread badly. So just yeah, still playing it very cautious. I think even if the bull case is 100% correct and we're going to get some big pump in the future, then it means that they're going to need all those longs to get taken out to open their positions into that spread to do that pump. So it's and then sell it off at the top when everyone is euphoric again. So yeah, trade carefully, and yeah, we'll catch you again. Also away this weekend too, so probably yeah, out of town wedding, so probably may not be any update on Saturday, maybe Sunday, but it's been 120 plus days, so hopefully it's okay for me to take a day off, and yeah, we'll catch you again. Bye bye.